Do you think your money is safe in the bank? That they're just holding your cash and helping you with transactions? Think again. The financial system is a maze designed not just to serve you, but to systematically pull wealth from your pockets, often with your unknowing permission. Today, we're pulling back the curtain on the perfectly legal yet deeply shady methods banks use to get rich at your expense. This isn't a conspiracy theory. It's about understanding the real mechanics of a system built on fees, leverage, and a huge information gap. We're going to expose 5 ways banks steal your money, all within the law, and give you the knowledge you need to navigate this tricky financial world. Prepare to see your bank not as a partner, but as a sophisticated business with its own agenda that rarely lines up with yours. But first, leave a comment below telling us which country you're watching from. I'm just curious to see how far this message is reaching. Let's start with one of the most obvious yet widely accepted ways they take your money: overdraft and NSF fees. These aren't small penalties. They're a multi-billion-dollar industry that preys on the financially vulnerable. Imagine you accidentally overspend by a few dollars on a small coffee. Instead of just declining the purchase, your bank slams you with a $35 fee. Suddenly, that $5 coffee costs you $40. This can happen multiple times a day, turning a tiny mistake into hundreds of dollars in fees. What's worse is that many banks deliberately reorder your transactions. They'll process the biggest purchase first, even if it happened last, to make sure more of your smaller purchases trigger those overdraft fees. This isn't an accident. It's a strategy to maximize their profit. They know your balance, but they let the transaction go through anyway, knowing it will trigger a fee. Why? The profit margins are insane. It costs them nothing to process, yet it generates billions every year. This hits low-income individuals the hardest, trapping them in a cycle of debt. It punishes financial instability instead of helping. Legal? Yes. Ethical? That's a question you should always be asking. Next up, let's talk about the very heart of banking: the interest rate spread. This is the most fundamental way banks legally profit from you, and it's so baked into the system we often overlook it. Here's how it works. You put your money into a savings account, and the bank pays you a tiny interest rate, often close to zero. Then, what does the bank do with your money? They lend it out for mortgages, car loans, credit cards, and for those loans, they charge much higher interest rates: 5% for a mortgage, 8% for a car loan, and sometimes over 20% for credit cards. The difference between what they pay you and what they charge others is the spread, and that spread is pure profit for the bank. Think about it. Your $10,000 in savings might earn you $50 a year. That same $10,000, when loaned out, generates hundreds, if not thousands, in interest for the bank. They are leveraging your capital, paying you almost nothing to make huge profits for themselves. You take the risk of inflation eating away at your savings, while they get guaranteed profits. Your responsible saving becomes their opportunity for massive gain. Our third point is the maze of hidden fees and maintenance charges. This is death by 1,000 cuts, slowly draining your finances. Banks are masters at hiding their fees in long, complicated documents. You sign up for a free account only to find a monthly service fee kicks in if you do meet a random minimum balance or set up direct deposit, and it doesn't stop there. Want a paper statement? That's a fee. Use the wrong ATM? That's 2 fees. Transferring money internationally. You'll face huge wire fees and bad exchange rates. Even closing an account can cost you. Each fee might seem small, but over months and years, they add up to a lot, quietly siphoning your wealth. The real question is whether these charges are for a genuine service or just another way to make money. Often, it's the latter. Banks are experts at creating fee events, situations where you accidentally break a rule and get charged. The lack of clear communication isn't a mistake, it's a strategy. It's wealth extraction by stealth, one small, legally allowed charge at a time. This next point might seem abstract, but it's one of the most powerful ways your money loses value, with banks often being the main beneficiaries. The silent erosion from inflation. When central banks print more money or keep interest rates super low, they devalue the currency. More money chasing the same goods means higher prices. That's inflation. So how do banks steal from you here? Well, when your money sits in a savings account earning 0.5%, and inflation is at 3 or 5%, your purchasing power is shrinking. The real value of your savings is being eaten away. Banks, however, often benefit from this. They hold massive portfolios of assets that go up in value with inflation. And because of fractional reserve banking, they can literally create money. When you deposit $100, they only have to keep a small fraction. They lend out the rest, creating new money in the system. This expansion of the money supply contributes to inflation, diluting the value of every dollar you have. So while your balance might grow a little, its true buying power is constantly being eroded by forces that banks are perfectly positioned to profit from. Our fifth and final point is the deception of financial advice and proprietary products. This is a more sophisticated way they extract your wealth. When you go to a major bank for investment guidance, you probably assume you're getting objective advice. But the reality is often very different. Many bank advisors are really just salespeople for the bank's own products. They're incentivized with commissions to push you into the bank's mutual funds, high-fee insurance, or complex investments. These products usually have much higher fees than simpler, low-cost options like index funds. That difference, even just 1 or 2% a year, can cost you hundreds of thousands of dollars in lost returns over your lifetime. The bank profits from these fees, no matter how the fund performs. Your financial success is less important than their sales targets. This is a fundamental conflict of interest. They're selling you what benefits them most, not what benefits you most. This preys on trust and financial illiteracy, turning your dreams for the future into their revenue stream. So, there you have it. 5 ways banks, operating completely within the law, systematically take wealth from you. From overdraft fees and the interest rate spread to hidden charges, inflation, and biased advice. These aren't accidents. They are built into the financial system. This isn't a call to abandon banks. That's just not practical. It's a call for awareness and financial literacy. Understand these mechanisms. Question every fee, every product, every piece of advice. Demand transparency. Look for alternatives like credit unions, neobanks, and independent financial advisors. Your money is your power. Don't let it be quietly siphoned away by a system that benefits from you not paying attention. Arm yourself with knowledge. Read the fine print, and make informed decisions that serve your financial well-being, not just the bank's bottom line. Understanding how the system works is your first and most crucial defense. If this deep dive into the hidden truths of banking has opened your eyes, then hit that like button, share this video, and subscribe for more unfiltered truths about money and power. It's time we stopped being passive and started demanding a financial system that truly works for us, not just for them.